Okay, hey, this is Brant from TradeGuild.net. It's the 26th, Saturday the 26th of July, and I'm just going to do hopefully a quick video and cover what happened in the market this week. A big week, of course, again for the market. I just want to mention real quick, if you're watching the videos on YouTube, swing on over to TradeGuild.net. Check out the website because, a lot of you email me and say you love the videos. When's the next video coming out? It takes me a lot of time to do the videos, unfortunately. If anybody has some good ideas on some good video editing software, I could sure use it, because for some reason what I'm using now is cutting off the top and the bottom of my videos, so I need some good ideas for that. I'm using a Mac, by the way. But more importantly, it takes a lot of time, and a lot of the really good information, a lot of the good calls, a lot of the good transitions that happen in the market happen very quickly, so I don't have time to make videos, and a lot of times I don't even really have time to post them on my website. So the good information, really, the big transitions in the market, you'll find on the website. You won't see them in the videos. So swing on over to Trade Guild. There's a hyphen between Trade and Guild, and then .net. So check out the good information there, and a lot of times I'll post charts and everything too, pictures of charts, so you can see what's going on. One of the things that I had posted this week, of course, the XLF was one of the big performers this week, of course, and the S&P, of course. The NASDAQ has lagged. The Russell has been a stellar performer, but I posted about midweek that there's a transition, there's seemingly a rotation that's going on in the market, and the NASDAQ looks like it's set to start to outperform, whether or not that means outright gains or just that it performs better on a relative basis, meaning it doesn't go down as much. I didn't really know which way that was going to go, but in any case, the NASDAQ looked, the Qs in particular, looked set to outperform, and lo and behold, that's what's happened in the last couple of days. For instance, the XLF Thursday was down 6.72%. The NASDAQ 100 was down 1.55%. The Dow Jones was down 2.5%. The S&P was down 2.31%. The NASDAQ Composite was down almost 2%. So the Qs were down. They were the only ones that weren't down more than 2%, so they had performed better on a relative basis. As far as Friday goes, the Dow was up 0.19, the S&P up 0.42, the Composite, NASDAQ Composite, up 1.33%. The Russell 2K, which has been outperforming, has been up yesterday 1.13%. The XLF down 0.38%. The Qs, the NASDAQ 100, up 1.63%. So again, the NASDAQ QQQs have been outperforming. So that was posted on the website. So, of course, you wouldn't have seen that in the videos. But the NASDAQ QQQs have been, not performing as well in this rally in a broader respect. They've kind of been a little bit of a disappointment. So we're going to take a look at the major important averages, and we're going to take a look at oil, because something big is happening with oil. And we had some great calls on oil too. We hit that right out of the park. We hit AMR. That was posted, I don't know if I did that in the video, but that was posted on the website 2 days before AMR was up 32% in one day. We had AMR as a long trade on the website. As far as the price-volume relationship, as of Friday, the major price-volume relationship was price up, volume down, which is a bearish relationship. The stocks that I track, 2,449 stocks were price up, volume down. The next closest was price down, volume down, so volume down across the board. That was 1,475. The bullish volume relationship, price up, volume up, was 1,393. And finally, price down, volume up, was 1104. So across the board, price up, volume down, a bearish relationship, suggesting that we're not done with this pullback as of Friday anyway. That's what it was looking like. So let's get started. Let's take a look at the XLF first. And here we go with the XLF. I have some trend lines here. XLF, you can see we had a some resistance here on this candle and a big day down over here. Friday, this is a fairly good-looking candle. We would see, it comes where we would expect to see it with a little bit of support over here. Ultimately, I think there could be some more downside, and I wouldn't be surprised to see a move toward this gap. I don't know if it would completely move into that area, but perhaps maybe even down here around the 20 mark, we might see a move down there. But on XLF, let's take a look at some 3C charts. First up, I want to show you a 60-minute chart. Okay, and this is 1 hour of 3C. I'm going to zoom in a little bit, hopefully. And you can see over here, this is where we have a negative divergence, and this is where I started talking about getting out of XLF. I had some calls in XLF, and I took my profits on those. I think those were 22s, so I took my profits on those and got out. And I also had some puts on XLF, and I think those were 20s, and I went ahead and closed those out Friday as well, just because I had profits. I wanted to lock in those profits, not necessarily because I think we're ready for change in direction. I think there still could be some more downside, but this is a leading negative divergence. You can see it's moved below this level, so that's kind of an ugly looking chart. I'm not really too impressed with that. Let's take a look at a 30-minute version of this chart, and again we should see a higher high on this indicator. This is my personal indicator that I developed, 3C, and I use it to track accumulation distribution. Again, we should see a higher high. That's a negative divergence, suggesting that this is about to roll over, which it did. It rolled over here. A 5-minute version of this chart, we can get a little closer view. This is where we start to see some de-acceleration on the downside. We start to see a little bit of positive accumulation in here, and you can see how it's flattened out over here. Over here we have an outright positive divergence. The stock makes a lower low over here, and this makes a higher low. We get a little bit of a bounce off that. If we go ahead and really take a closer look at a 1-minute chart, we can see what looks like a bounce brewing here, positive divergence, another positive divergence, and we see that move up. That move up, however, did not create a higher high over here, so that created a negative divergence. So we're really, looking at 1-minute charts. We're really tearing this thing apart. But over the long haul, I think there's possibly some more downside to go. Let's take a look at something else here. This is a setup that I use. It's a crossover setup with a custom indicator here and RSI down here with MACD. And typically what I like to see is a crossover here. The first pullback usually is to that yellow moving average, a 10-day moving average. Once a trend gets underway, the second pullback usually comes closer to that 22-day. This red dotted line is a 30-bar VWAP, volume weighted average price, and you can see we're sitting right pretty much on top of that at this point. And this is why I'm thinking maybe we're going to see some support around this $20 level, maybe a little bit more of a pullback over here. Okay, let's take a look at something else. This is something I call my MACD heat map, and I think in some previous videos I've given a little bit of a better explanation of how it works. I don't really have time today, but right now this is pretty much on a 1-day chart. It's in the buying zone. It looks pretty good. If we take a look at a 60-minute chart, what we'll see is the red, which is kind of the danger zone. And usually when I see my second my second red hill over here, or my first negative divergence in this blue, this is where I'm going to start exiting my position. So typically we would want to see this continue to build higher and higher, and when we see a negative divergence like this, it's suggesting a change in trend, and this is where and why I got out of my XLF calls. So that's what that looks like. And on a 15-minute, I'm going to show you what this looks like. On a 15-minute, you can see the downtrend. We haven't really seen a real good second hill, if you will, on the red. So that's why I think possibly we have some more downside to go. Haven't seen this crossover yet either. And this is not moving average. This is actually an indicator with a moving average. So we haven't seen that happen yet, so possibly more downside, I think.